Hey everyone, there's a lot to talk about today, and I want to discuss whether or not Tesla stock owners and Tesla owners are part of a cult. And I also drove a Model X recently.
How in the heck do you close this thing?
For the first time, and the acceleration literally made my brain hurt. So I have some ideas for a video that I might want to do, and that might be a lot of fun. I'll talk about that later. But first, Sprint stock is up 69% after hours today, and it's a result of a Wall Street Journal report which said that a federal judge might be moving to approve a merger that was contemplated in between T-Mobile and Sprint. And so I put together this little chart which basically shows where Sprint should have been trading if people thought the deal would close versus where it has actually been trading. So the way to think about this chart is that if people think the merger is going to close, those two lines should be touching together exactly because the shares would be interchangeable. And when the lines get out of whack, and you can see Sprint has been declining over the last number of months before it shot up tonight, if the lines separate and Sprint goes below, it means that people's confidence in the deal closing is low. And I'll just leave on the screen how I made those calculations. They're right here. I'm not sure how interesting it will be to people, but that's how you do the math. And people might be wondering also, well, why is Sprint up 69%? Like, why isn't it up 5%? Why isn't it up 200%? And here's my answer. So basically, pro forma for the merger, the combined company, if the deal closes, will have 1.2 billion shares. And if you add up the EBITDA of Sprint and T-Mobile, you get about $22.5 billion. The two companies said that they expected to get $6 billion of synergies. So this is sort of my range, anywhere between just a straight combination of the two companies or a combination of the two companies plus synergies. I took a look at AT&T and Verizon's trading multiples, and they're around 7 times. So if you assume that the pro forma company of T-Mobile and Sprint trades like Verizon and T-Mobile, then that would imply a pro forma enterprise value of around $157 to $200 billion. The two companies told us that they expected to have about $65 billion of net debt pro forma, and that implies an equity value of $92.5 billion to $134.5 billion. And using that pro forma share count of 1.2 billion, sorry for all the numbers, it tells you that T-Mobile shares should be trading around 72 to 104, depending on whether or not you believe in the synergies. So it's sort of interesting because T-Mobile was trading almost right in the middle of that range when it closed today at 84, and after hours it shot up to around 90. So literally right in between those two numbers that I got, just sort of on a back of the envelope basis. And a few key dates to point out. So you can see right here, this is in April when the merger was actually announced. And you can see that those two lines are touching, indicating people thought there was a high chance the deal would close right when it announced. And then the spread sort of drifted out a little bit and people lost confidence. But when the Justice Department approved the deal on July 29th, 2019, the spread contracted to an all-time low. Then it sort of drifted out, and this was the result of a couple of states' attorney generals getting together and saying, hey, we want to protect the consumers in our state, and we would like to block this federally approved deal. So even though the deal had been approved by the FCC and by the Justice Department, some states banded together and said, we want to try to block this deal. From what I understand, this is relatively unprecedented, but here's something that's really interesting. Like, you might be asking yourself, well, this thing's just a rumor from the Wall Street Journal, how real is it? And you can see here that the Journal reported on July 25th, 2019, that the Justice Department was in talks with the states to win support for the T-Mobile deal. And then the very next day, the Justice Department approves the T-Mobile merger. And you can kind of see that news reflected in the stock because it shot up. Sprint stock shot up right here, and the merger discount closed. And now, again, we have the Journal coming out and saying, hey, this federal judge that's responsible for overseeing the case of the state's attorney generals has approved the merger, or at least blocked the argument against it, and Sprint stock is shot up again. So I don't own Sprint stock or T-Mobile. I'm not doing anything with this. Who knows? I mean, it is sort of a rumor. And also, the math to me really isn't that compelling. I mean, maybe if the pro forma merger would result in a share price of like 150 or 200 or something like that, there would be a lot of upside. But, based on my math, it tells me that T-Mobile should be trading around 72 to 104, and Sprint should be trading at exactly that same price, adjusted for the conversion factor, which I've done up here. And so anyway, I don't know. I think the stocks are trading roughly where they're supposed to be. And you can see this was a surprise to the market, because on January 31st, which is only a few days ago, 10 days ago or so, you can see that the Journal had an opinion piece that said why hope is fading for Sprint and T-Mobile. And it says, well, I won't get into the politics of it, but the point is that people were not very optimistic that this deal would close. And here are the two CEOs, the Sprint CEO and Jean Leger, the T-Mobile CEO. By the way, I'm a T-Mobile customer and I really like T-Mobile. So I hope the service gets better as a result of this merger. And if it does close, I hope my bill doesn't go up. So here's Roger McNamee, who was on CNBC today, talking about Tesla stock and referring to it as a cult-like situation. And I really have a lot of thoughts on Tesla and the trading dynamics that have occurred over the last couple of weeks. There's no question that things got to a little bit of a fever pitch last Tuesday when the stock was up past $920, $940 a share. But I really don't mind having somebody out here like this making these statements, even though I disagree with him. And the reason is it just shows me there isn't runaway euphoria in the stock yet, that you still have a healthy amount of skepticism from people that are evaluating the stock. You still have doubters and you still have non-believers, and you have people that are expressing those bearish views in very public forums. And so I think that debate is very healthy for the stock. And so yes, even though things got a little bit crazy, I just still don't see the type of runaway euphoria that you might expect to experience with a bubble type of situation. So here he is.
McNamee's here at Post 9. That's the headline in the Journal this morning. I've gotten my butt kicked.
Well, it couldn't happen to a nicer bunch of people, But I look at it and say, that it may be the battery that's driving the business, but it's jet fuel that's driving the stock, right? And it feels like, 20 years ago, right? I mean, for those of us who've been around a while, the late 90s saw a lot of that kind of action, and it's really fun to watch. I can't imagine owning the stock right now just because, who knows, right? It's so wild. And this is what makes markets great, right? Because at the end of the day, it's about buyers and sellers, and the shorts they can sit there and give you 100 pages of good data why the stock is overpriced. And in the short run, it doesn't make any difference because there's a lot of enthusiasm.
But your expertise is identifying early growth stories and stability and discounting it. So,
none of which applies at this price on this stock, right? You look at this and go, this is obviously an extraordinarily well-discovered stock. It's an incredibly high-priced stock. And it has fans who just support it. It's a cult-like situation, and
well, Roger, let me try to do what I love to do, which is take a bit of the other side. Is this 20 years ago or is it 15 years ago? Because 15 years ago, Apple, with the iPod and the iPhone, really changed the economics of not just the PC business, but kind of the consumer electronics ecosystem by vertically integrating and capturing more profit than anybody had seen a hardware player do before. Isn't it possible that Tesla is on the road to doing the same thing in auto?
No, I think it's entirely possible, John. We've had that conversation many times at much lower prices. My issue is that if we go back 15 years, Apple was still trading at, 10 times, 12 times earnings. It didn't get off of trading at cash value until 2004. And so I look at this and go, there is a price at which that case is really fantastic for the stock. Right now, I think that whole thing is in the stock. And the question is there more in the stock than just what those fundamentals give you? I don't know the answer to that, but what I do know is that it's fun to watch.
So there's no question that things were frothy in the tech bubble of 2000. But here's just an interesting exercise to think about. So it looks to me like Amazon peaked around $86 a share in 1999. And today the stock's at $2,134 a share. So the stock compounded at about 17.5%. So even if you bought Amazon under bubble conditions at the height of 2000, you still compounded at a really nice rate. And obviously, if you bought it after the crash, say around $12 or maybe even lower or higher, that you made a lot more. But the point is that the market right now is in a state of disequilibrium when it comes to Tesla, because you have so many different constituents attempting to discount the future price of some things, frankly, that are very unknowable. And so, yes, you are going to get volatility in the stock, but healthy debates are important, I think, for the health of the market and ultimately the health of Tesla stock. And, it's amazing. At some point, you have to ask yourself, like, what can this company do to be congratulated by Wall Street? The bar seems so high. I don't know. It just seems fun for Wall Street to sort of rag on Tesla for whatever reason. But I don't necessarily think people that buy Tesla stock or people that own Tesla vehicles are part of some cult. I mean, the product is a legitimately great product. And as I said at the beginning of the video, I had an opportunity recently to explore the product a little bit more. And I'm thinking of making some type of reaction video. I know that these are popular on YouTube and a lot of them have been done, but the Model X has had performance upgrades recently. And obviously the autopilot / FSD software is as good as it's ever been. So it might be interesting to take some people out who have never sat in a Tesla before and take them through the paces in terms of the acceleration, the performance, the handling. And there are just so many fun things in the car. It really is awesome. I know a lot of people that are listening probably own one, and so you know what I'm talking about. But a couple of things that I was amazed by. So one thing is that on the heads-up display in front of the steering wheel, the FSD system will give you a rendering of all of the different objects that the car sees around it. And so it will give you an accurate rendering, for example, of a car that's next to you. If it's a short car, it'll render a tiny little car. If it's a large truck, it will do that. If there are traffic cones over on your right or on your left, then little orange traffic cones will appear on your heads-up display. The same thing goes for some street signs and lines on the road and all of these different things. The car also automatically parallel parked itself perfectly. And yes, in addition to doing the acceleration test, which literally did hurt my head and my brain, I tried autopilot as well, and it's just pretty magical. So I thought the questions posed by CNBC around, hey, is Tesla more like Apple rather than some, in some type of bubble? I thought that was a good question. And we'll see what happens with the stock. But the product, it sounds a little silly to say, and I apologize for piling on, but the product really does touch your heart. Like Elon said on the Third Row podcast, I mean, it just is special. I think it's something that once people experience it and they really get to understand how many things the car can offer you, that the idea of buying an internal combustion engine vehicle really won't make sense, because I think there's a good chance that they'll be obsolete soon. So anyway, let me know what you think. Would you like to see people riding around in a Model X for the first time? Would you like to see them experience the acceleration and see some of the other modes and tricks and other things that the car can do? Or have you seen too much of that already? Let me know. I'd be interested to hear. And also one more thing. If you haven't subscribed yet, I really hope that you'll think about it, because the more viewers that we have and the more subscribers that we have, the bigger things I can do for videos. So just a small show of support will really make these videos so much better as we continue to grow and grow and grow. And I know that it helps me. So anyway, I thank you for considering subscribing, and I will see you soon. Thanks. Bye.